hopefully we are starting to go live right now. So yeah, so we should have just gone live on YouTube. I posted on Facebook and then on the Discord, so hopefully we'll start to see some people come in. My guess is we'll probably get some Data Trader members coming in. I already see Shyam saying, question, when do you know if it's time to hedge and also when to take it off? That's a really good question, and so we're definitely going to cover that. The goal for tonight, guys, is that we are going to do a presentation. Lance is pretty good at these hedging, and you know, I've always been a little bit skeptical because I always feel like when I hedge, I lose the hedge, right? Like, but Lance has shown me ways to do where we're basically doing low cost hedges where you don't care if you lose 25 bucks because you're risking, like if you end up going to the downside, that 25 bucks could be 250 bucks that offsets the loss for the next, like the trade that is being challenged. So that's something that's a really good question, and we're definitely going to address that in the presentation. I wanted to start off today, though. Sorry, Lance, did you have something to say?
No, that was fine. Go ahead.
Yeah. So I was just going to say, like, one thing that we've noticed is that a lot of people switched off over the last few months. And this is the chart on ES on the daily. And you can kind of see why some people might be getting a bit grumpy, right? We had this nice long bull run over the summer. And then come like July, August, we've just had this horrible downtrend, which is reminiscent of some, you know, series sell-offs that we've seen over the last year or two, with 2022 being a big part of it. And so you can start to see if people have, for example, if they're selling strikes for puts on futures or just cash secured puts and things, these red lines could indicate areas. In fact, one of them is one of the ones that I'm in a position in at the moment. You can start to get very nervous here, right, where you're starting to get down in price towards these strikes. And you're starting to sit there and go, oh God, this thing, I still have 10 days or 3 days to, you know, this thing could easily drop 100 points down and challenge and get signed on some of these things, which can be quite, if it's not part of your trading plan, can be quite stressful and quite worrying. So this is kind of why I wanted to sit down with Lance tonight and just go through like what his thoughts were. And he's already helped me substantially. So really, like, to be able to stay in the trade has been like a really big deal for me, knowing that I've got some backup, like the hedge is going to hopefully back me up. So I'm excited to have Lance talking about his presentation where he goes into the different strategies, and some of them are fairly simple and some of them are fairly advanced that you might not think about. And I think we're going to answer your question pretty well in the next half hour or so during this presentation. So hopefully this is kind of setting the stage for you guys where it's like, okay, this starts to make sense. This could turn and bounce, but this could keep selling off. And all your strikes, if you're selling puts or spreads or whatever, could end up getting really challenged and really getting you into bother here and causing your stress levels to go through the roof. So this is why I'm excited to talk to Lance about it. I talked to him on private message on the Discord, which he runs, called thetatraders.com. I'll leave a link in the comments here if you're not a member, although I suspect a lot of people will be. The idea is that, you know, if you join thetatraders.com for the 7-day trial, Lance can teach you these things more carefully and with proper examples with his own trades and with other people's trades and things as well. So just bear that in mind as this presentation goes on. Does that make sense, Lance? Am I giving you a good foundation here to get started on your presentation part of the hedging?
It's a more solid foundation than my possible house problems. Yeah, it's a good job.
Okay, cool. Okay, so do you want to share your presentation and we can go through it and just answer questions as we go? And I'll just put it up and take mine off.
Yep. I have room for questions as we go through this. So, are you able to see my hedging strategies page right now?
Yep, just put it up on the thing. So yeah.
All right. So again, there will be room for questions. I'm stopping the slides where there's questions, and then Russell, if you could just say them out as they come up at that point, and then there'll be room for questions afterwards. Okay. So we're going to go over some hedging strategies. I run thetatraders.com, where we look at selling options and make theta work to our advantage so that we could make consistent profits off of it. We're going to look at some hedging strategies that you could do and possible amounts that you could consider doing and when to take them off, as the person that wrote a comment wrote about as well. So why are some reasons why we might want to hedge? One of the main reasons is to help with these black swan events that you might have heard or seen before, right? We had the COVID crash, 2020, had 2003, some big downfalls, 2008 was some big downfalls. So it happens pretty rarely, obviously, when you look at the time period of just trading in general, but they do happen from time to time. So we want to be coming up with strategies that might be able to help mitigate some drastic losses. One of the main things I want to mention with these hedges is you're not looking to make a ton of money on the hedge. It's primarily meant to protect against your portfolio. Okay. As Russell said earlier, it can stay in a losing trade possibly a little longer than you normally would, based on a lot of buying power that we're going to talk about. Sometimes hedges could actually increase your buying power. You're not necessarily going to use that buying power, but it gives you a little bit of a cushion in case there might be possible margin calls and whatnot. So I'm going to go over two main things with stocks first and then with futures, because I know some members will only do stock-based trades. Some people only do futures-based trades. Some might do both, which I do both as well, and I do alerts and recommendations on those. So we're going to start relatively easy on these strategies, and then by the end, they'll be a little bit complicated, but definitely here for questions. So one of the easiest ways to hedge against stocks that might be dropping is to simply buy puts. So if you buy a put, you want the stock or ETF to actually go down in price. By buying a put in a certain time period, let's say you buy a put 14 or 30 days out, you need the stock to actually move down in a short time period. So by buying puts, it's not a very consistent strategy to actually make a lot of money on, but it could work out, especially if the market does drop in that specified time period. So it could also help you get delta neutral. What that means is if you're selling a lot of puts and selling premium, you're going to have a positive delta there. And then if you have drastic moves down on your portfolio, you could get even more delta positive. And that could be pretty dangerous after a while because any slight moves could actually amplify possible losses. So by buying puts, you actually help neutralize it. Think about a seesaw moving too much in one direction. If you put another weight on the other direction, it's going to level it out a bit. I would recommend around a 0.15 or so delta if you're just straight buying puts. So if you have mostly SPY, QQQ, meaning ETFs, you can consider buying about a 0.15 delta put, or a few of them. We'll go over possible percentages to do later, and that could help mitigate some of those risks. Another one you could do that's a little bit more complicated, but will use a little less of your actual buying power, is to buy a put debit spread. In this case, you're going to buy a put and then sell a put even lower than the bought put. So let's say SPY, I think last I checked, is in around 420s or so, 430 around. You might be able to buy around a 415 put, and then you could sell a 410 put. You're, again, selling lower than the bought put. What's good about this is it does limit your debit because you're taking in some premium when you sell the put as well. A little bit more complicated, obviously, because if you just buy a put, you know right away what the price is. But in your trading programs, you could easily just see by adding on a sold put below it, it will lower your buying power. For these, just simple recommendation, do around a 5 WIP debit spread on SPY if you're using that. You don't necessarily have to go really far away on your debit spreads. And then the bought put could be around 0.1, 0.15 delta or so. So again, if you're buying a 410 put, you would sell around a 405 put. Another straightforward way is to buy VIX calls. VIX has to do with your implied volatility. So the market has been dropping quite a bit in the last few weeks, like Russell showed in his chart, and the VIX has also been increasing. So there's more uncertainty in the market right now than it was a few weeks ago. The VIX currently is around 17 or so, and it was in the like 13, 14 area pretty recently. So when this happens, you can buy VIX calls, and if the volatility goes up, then you would profit on those actual calls. Also, when the VIX market drops in general, VIX tends to expand. So you could use it as a hedge. You would want to buy slightly out of the money fixed calls in most cases. You can also buy in the money or even at the money calls if you want to be a little bit safer in the actual strike price. But as we're going to see, these hedges are not necessarily meant to make a ton of money. They're just meant to mitigate your risk on other positions. We'll leave it up for any questions. Russell, if you want to name them in the chat, if we have any. Russell, anyone there? I'm not sure. Let me double check in the studio here. I hope you guys can hear me. All right, I didn't see any in the chat, so we're going to move on. Hopefully, we're still live right now. So we're going to look at futures now. In futures, we're going to be buying puts. And you could be buying puts at a fairly low delta in general. So by buying a put, it actually increases your buying power, which is really interesting because a lot of times when you're buying puts, especially with stocks, you're not necessarily going to have more buying power. You're actually going to lose a little bit just because you're paying a debit on it. But by buying puts on futures, you'll be able to actually increase your buying power more than it was before, mostly because you're getting closer to delta neutral, and then you'll also be able to stay in trades a little longer, possibly. In general, I recommend around a 0.03, 0.05 delta. If you're doing MES, it's a very standard one. You can also do ES if you have a larger account. And I recommend around 14 days. I've tested out a few different time periods. 14 is a good one. You could also do around 30 days as well. I see K-Bun said the question, when do you know when it's time to hedge or not? For stocks in general, I'm going to show a little bit later that you could actually pretty much leave hedges on consistently at all times. It's hard to know exactly when a hedge will work or not. So if you just leave it on all the time with a fairly small amount of your buying power, then you'll be able to be okay in those big black swan events. When to take them off, I'm about to go over with futures. And it's very similar advice to stocks. For futures, you could buy a put debit spread. I put a little picture of a spread here for your bread and whatnot. Very similar to stocks. You would buy a put and then sell a put a little bit lower. For MES, you could look around 50 to maybe 100 strikes below it. Same with ES. This does limit the cost of trade, just like stocks. I'd recommend possibly going a little higher on your debit, around 0.1 delta on your bought put, 50 to 100 width on the sold put. And again, 14 days is a pretty reasonable way to go. You can go up to 30 days if you like as well. Another more slightly complicated one is called an iron butterfly. In this case, you're going to possibly make a lot of money on these, just the way it's set up. What I recommend is doing this and using them against other positions that you might have. Let's say you sold a put at around 4,000 and the market's dropping really close to 4,000. You could set up an iron fly, which is usually set up as a debit, and you're going to essentially sell two puts at around where your sold put strike is, and then buy a put about 3 strikes above it, buy another put 3 strikes below it. Put a nice picture of the butterfly there. A little bit more of an advanced strategy. In this case, we're trying to get to a certain strike price that's really close to where our actual position is. Okay, I'm going to leave it up for any other questions. Hopefully you guys could hear me. I'm looking at the chat right now if you want to type out your question or if Russell could actually say them out. Let's see, Glenn and K-Bun, how are you guys doing? Sam said, which hedge technique gives us the biggest bang for our buck? Good question. It's hard to necessarily say. I think buying a straight put is going to be very straightforward and could possibly make a lot of money if the market drops well below your bought put. So that's probably the most efficient way to do it. And that's the way that I've been mostly doing them. Hey, Russell, do you hear me?
Yeah, I can hear you. Sorry, I was muted. I was actually talking a couple of times during that. And I was on to just point out a few things. So recently I've started hedging with Lance's. Basically, Lance has been kind of tutoring me a little bit on these things, and I've been really seeing the value of it. So if we want, we can go and look at some of the actual trades that I've been doing recently with these hedging, and we can talk them through. I don't know if I've done them well. I don't know if I've done badly, but like it might help as a learning experience for people.
Yeah.
What's going on? So K-Bun is saying is an example of any flies. Well, I have 2 flies on, and part of the reason that I kind of asked Lance if he would do this is I'm looking for some help on these because I took 2 of them, and I don't know if I've done them right, what my risk reward is. Like they are complex when you first get into them. And so we could walk through an example if that's something that interests people in here, using my real account and my real positions at the moment. I'm happy to do that because they are cool, because you only lose a small amount, but you gain if things go badly against your position, like your main hedge position you're hedging against, you can offset that dramatically. Like you might not negate it completely, right? But you'll take a big chunk out of that blow if the worst case happens. So I'm really excited about those, even though because the market's starting to rebound a little bit, my flies that are hedging my main puts, my sold puts, are actually slightly negative. They're not actually in the positive at all. So we could talk that through if that's something you guys want to talk about. It's a cool strategy.
Yeah, I'll show one right now on Thinkorswim if you'd like.
Okay, might be easier if you do.
All right, so let me set that up real quick. All right, can you see my Thinkorswim account right now?
I'm just adding it to the stream.
Okay.
Yeah, there we go.
And K-Bun, you are a Theta Traders member. I did post this on the Ironfly channel, so you can see the example of what I did as well. And for any other members that might be interested, I'll be posting these pretty regularly. All right, so here you see, I'll do it with a stock first, so it's a little more straightforward. So I'm just on a paper trade account right now, SPY. We're at 424. So let's just say that we sold a put around 415 or so. So we're looking for a pretty big drop in order to get there. It's not necessarily going to happen, but we're worried about it and we want to do something about it. So if you go to the trade tab on SPY, I'm just going to make an example here. Let's assume we did it 14 days out, or sold puts 14 days from there. So what we can do is go to the option tab, 14 days out, and let's say we sold the put at 415. We're going to set up an Ironfly like this. You click on the bid, and we want to make these 2 contracts. So we're selling 2 puts at that strike, but now we're going to buy puts above and below it. So I might say around 418, about a 3 width or so is probably adequate. Excuse me. Hold control, press click, and then you're buying 1. Then you're going to go the same with 3 strikes below it. So around 4, I can't do 3, 412 right here. Control click, and then I'm buying the 412 put. You can see here it says butterfly. Again, I'm selling 2 at the 415. Buy 1, 418, buy 1 at 412. This is a very cheap fly. The debit's only between $17 and $21. So it's not that much money in the hedge. And obviously you could do more than 1 contract if you want. If you look at the Analyze tab, you'll see this nice little tree right here. And this is where the max profit is, right at around 415 was where we sold our puts. The reason why it's the max profit is if we're slightly above 415, our sold puts will expire worthless. We kept all that premium. The bought put at 418 will be worth a bit of money because it went down a little bit. The bought put at 412 is not going to be worth anything, but it still makes a lot of money. You can see on the bottom left right here, for only about $17, you can make $240 or so dollars if you happen to close right here. Now, it's not going to happen much at all, pretty infrequent. You might be somewhere around here in this triangle, but you can still make decent money, $60, $70 off a $17 bet. So you could easily 3 to 5x your money sometimes. And if you get quote unquote lucky, you can make over 10 times your money. Does that make sense?
Yeah.
All right. Just looking at questions right now. Do I trade the VIX options often? I personally don't. I know some traders do. I think it makes a little bit more sense to buy puts on the same underlyings that you have trades on. So let's say you're long in SPY or you sold a put on SPY and you're worried about big downturns. Doing a trade like this would probably make a lot more sense. It just works logically with the actual position you have. But buying calls is perfectly fine on the VIX as well. Pedro, do you always try to be delta neutral? Perfect is the enemy of the good. Sometimes you get over analyzing being delta 0 or very close to 0, and I don't think it's necessarily the end of the world. I personally am long-term bullish on SPY in the markets, so I don't mind having a slight positive delta in general. But if it gets really high positive delta, I'll look at some of these strategies to lower the delta. Boomer Trade said, what is a good way to determine how much big of a hedge you need? I'm going to get to that a little bit later in the presentation, so just hold for a few minutes there. And any other quick questions? That's all I see in the chat so far.
I think we're good.
All right, so let's go back to the presentation. Again, I'm going to get to those other questions with this, because I'm pretty sure we're going to get those questions anyway. All right. How much the hedge? It's the next slide on my presentation. I would consider personally about 0.25 to 1% or so of your total account value. That's your net liquidating value. Assume you got rid of all of your trades right away. You would get your cash back very close to what your net liquidating value is. And I would consider between 0.25 to 1% of this each month as a straight hedge. And I put a picture of the hedge trimmer, of course. So for example, if you had a $10,000 account, you could do about between $25 to about $100 or so every month. And to keep it simple, buy low delta puts. So you could buy some SPY puts, buy MES or ES puts as well. And that's pretty much the easiest way you could do it. You could also go into the put debit spreads or iron butterflies or buy VIX calls, all the things I talked about before, and use that as a possible account size. So it's more of a kind of art than a science in this particular case, what I think, because if you put too much of a hedge on, it's going to be a drag in your portfolio, obviously. Like if you're only making 2% a month on average and you're hedging 1.5%, 1.8% or so, you're not going to make much in the end because most of these hedges will expire worthless and you're going to lose all your money. Okay, these are not meant to make a bunch of money on. So just want to make that clear. Okay. If it's a futures account, similar percentages, 0.25 to 0.1% net liquidating. I put this motorized hedge trimmer because I think the futures are a really optimal way to go. So it's a little bit more advanced version here. If you're dealing with futures, 10K account, you could buy backslash MES or backslash ES puts and then spend about the same amount of money, $25 to $100, and do that about every 2 weeks or so. Example, 10K account, you would buy 14 DTE, MES or ES puts, and it should be a debit of about $25. We're not looking at a huge debit here because, again, it could be a drag in your portfolio if you're buying too many hedges. Okay. I'm seeing other questions come up, and we can answer them now. Goose Eggs, welcome. He's another Theta lifetime member. Is it okay to do on Tasty Trade? Yep, of course. You could do hedges on any brokers that I could think of because pretty much any brokerage you could buy puts or buy VIX calls. So, yeah, this is available on any brokerage. Husker said absolutely, especially using MES or ES. That's true. And do any other ones. Very good. All right, no questions right now in the chat. I want to go over a main strategy that I do at thetatraders.com that has a built-in hedge with it. There's a lot of information here, but I'm going to keep it relatively straightforward. I'm not going to go over too much of the numbers here, but one of the main, I would say it's a semi-hedge, it's not a full-on hedge here, is let's say the stock price is up here. We're going to be buying a put debit spread a little bit below where the stock price is. This will be for a debit, so you have to pay money out of your account. And the way that I set them up, it costs about $40 or so. So it's not a ton of money there. However, if the stock goes below this debit spread, we can actually make up to $250 off this. So you're looking at what, almost 6x your debit. So that's pretty good. I do want to take in some credit when I'm starting to trade. So I do sell 2 naked puts even lower than the put debit spread. And this takes in more money than the debit spread cost. And then also, if you want to, you could buy another hedge that I was talking about before. Use about 0.25% of your net lick every 14 days or so. You'll end up using about 0.5% of your net lick per month. And what's interesting about that is if this works, these could pay a ton of money, and it also lowers your buying power, and it keeps your buying power in check pretty much. Because if the market drops a lot, these hedges that are even lower than these numbers will pay quite a bit if it happens to completely tumble. Does that all make sense, Russell? Or others in the chat?
Yep, makes sense to me. I've got one of your PDS left over from that.
Oh,
So, yeah, and it's helping. It's really offsetting some decline in the market. So I'm really impressed with it.
yeah, so this PDS, as I'm going to see in my trade log, I have a few of these on right now where there's no risk anymore. I already closed my naked puts, made a good profit on those. And then even if this smaller hedge ends up expiring worthless, I'm still perfectly okay with it because I made a lot of money on these. And then if it drops a lot after I close these, and the hedge might pay too.
Well, that's what's happened to me. It's been amazing. The 112 I did the 2 sold puts, made decent profit off those. You told me leave the PDS on, and I'm like, well, why should I do that? Just close it out. It's a small loss. Who cares? Now it's $100 up, so,
Yeah.
like, which is a significant portion of the thing. So it's great.
Yeah, with making the extra $100 or so, you're making another about 7-8% on your total trade, and there's no risk on the table again. You got rid of your naked puts.
Yeah.
These are 2 hedges that I currently have on. I took the screenshot today, and they're from old 112s, meaning I already closed the naked puts. I made about 12% of my money in about 90 days off this trade already. And that's assuming these expire worthless when they're not worth a thing. So these might pay a bunch of money in for 15 days or so. This is a 50 with hedge. Put debit spread. This could make up to $250 more in my account if the market drops below the 4,200 price in the next 15 days. It may or may not do it. I'm perfectly okay if it does or doesn't do it because I made my target percent already. Okay? This is a roll. It's a little bit more advanced. I made it a 25 with instead of a 50 with spread, but I locked in about $75 on this trade already. And now my max profit on this current one is 25 times 5. So 125 more dollars I could possibly make if it goes below 4,300. However, if the market bounces up and goes above that 43.25, I still made $75 off this already, and I closed my naked puts. I already made about 12% on that as well. This is all literally like a free bet, in football, when I'm not much of a football watcher, but when there's like a offside or there's like a pass interference and they throw the ball anyway, it's like a free play because if it doesn't work and it gets intercepted or whatever, it doesn't matter because there's a pass interference already. But what if the receiver catches it, runs for a touchdown? They can just say, all right, we don't want that penalty. We're going to count the touchdown, right?
Yeah.
So it's really good in both cases. Like you don't mind.
Yeah.
You get your first down anyway on the pass interference, or you might get a touchdown out of it, right?
And I think this is a big part of why theta traders, and in particular the consistent passive profit system, is just one of the best strategies, if not the best, out there that I've ever come across over the last decade of trading. You have such a high win rate, so you'll have like a 90% win rate, well, 99% win rate. So when you combine that with some clever hedging, it's infallible. It's solid it's solid, and I think that's those two things combined give people the confidence to push things a little bit, and it's definitely it's phenomenal. You're doing an amazing job.
Appreciate it. So what's interesting, let me go back to this last slide. I'm doing a built-in hedge in the strategy already by buying this put debit spread. I'm considering, and I've already started one. It was a small hedge, but I'm going to be adding more hedges even lower than this because the target profits are still really good, even with the hedge on. If you look at the numbers in the very bottom here, if the PDS doesn't work at all, if the market stays anywhere in these little pluses, I can make 2.675% per month on this trade. Now, if the PDS does profit and the hedge doesn't work, so again, buying a put down here, if that doesn't work, but this works, I'm looking at about 9.25% per month on my money. And then, God forbid, the Black Swan hedge happens and the Black Swan event happens and the market drops 15% in a few weeks or whatever, it would pay even more than this. I don't even know the exact numbers, but it would be drastically more than that percent. Okay.
Nice.
This is the latest 112 trade I just did a few hours ago for thetatraders.com members. I did 2 contracts of the 112. That makes it a 224. So I bought 2 puts at 4,000. I sold 2 puts at 39.50. So this cost me a debit of 8.75. MES has a 5 multiplier. So 8.75 times 5, I don't remember the top of my head, $42, $43 or so. So I'm willing to pay that as a debit, as a slight hedge. Then I sold 4 puts way below where the current market is.
That's low. Yeah, that's huge cushion, man. That's great.
3,400 right now. MES is with this contract. MES H. Now this is far away. It's 134 days, but it's what 43 or so hundred right now. So we're looking at 43.38 is the current MES. We're going all the way down to 3,400. I got to get my handy dandy calculator here. So 43.88 is the current price of MES. Subtract 3,400. We need a 988 point drop in about 4 months. That's a huge drop. Divide it by the 4388. We're looking at 22% drop in SPY. And that's with the market already dropping pretty big the last few weeks, right?
Right.
So this trade will actually work if the market doesn't drop 22% in 4 months. And if it does drop, let's say 12, 15% in the 4 months, this will make most of its money. This will make $250. You're going to be looking at about 8-9% a month on just this trade alone. I'm willing to spend 0.5 or so percent per month on a hedge in case the market drops a lot. So I do want to mention, if the market drops a lot right away, this trade will be a bit negative. So I'm not going to be lying to you guys. You'll be down a little bit in the initial part of the trade. But if it dropped, 3.5 months out already, you would already close these out at a good profit. You have this hedge on for protection, and you can make even more money off it. And there's no risk anymore because you got rid of the naked puts. Okay?
Yeah. It's fantastic.
I just wanted to quickly show all of my current 112 positions. I have quite a bit of these on, as you can see. This is just one slide out of 2. I have a lot of 112 trades on. 106 days out, I have 3 of those. The one I just posted, 134 days out. I've done these a few months ago. 15 days out, right here. This one is a free hedge. I already made a good profit off it. These are another free hedge. They're in the money currently. So there's a good chance I make a good profit on these. And then I have a 43 days out. The debit spread's already in the money. Another 70 days out. 41.50 might happen, might not, but it's okay. Another one, 70 days out, 42.50. Good chance that might hit. So there's a lot of possibilities to be making extra profit on these. I'm going to say quote unquote semi hedges. They're not full hedges until you close those naked puts. When you close the naked puts, it's a hedge. It could possibly make a lot more money, and it lowers your buying power if the market drops. That might be a bit advanced for some members, but that is one of the things that I do teach at datatraders.com. And that's my whole presentation.
Yeah, and I think that a lot of the hedging, Lance just disappeared. A lot of the hedging is been really valuable to me because I tend to push the buying power of the futures accounts pretty significantly. So it's pretty interesting to see when you actually just add some of these hedges, suddenly your buying power comes back up, and suddenly you're no longer close to getting a margin call or not. So yeah, it's a fantastic strategy. I'm so glad that I partnered with Lance on this stuff. So Boomer Trade saying, how can I send some members of our trading club your way? So Boomer Trade, you have a trading club. If you would like to do some sort of, Lance is coming back. We're always interested in partnering with other people that have good audiences and good services and things. So if you want to drop Lance or me an email, I can put my email in here really quick. We're happy to work with you in terms of like that type of thing. Stock alerts reviewed at protonmail.com. So there you go. Lance is just coming back, so I'm just going to add him back to the system here.
So sorry about that, everybody. I accidentally clicked leave studio instead of unshare my screen. That was a mistake. I didn't mean to stop my presentation then leave.
No. People seem to be enjoying it. Boomer Trades asking, how can I send some members of our trading club your way? So I'm not sure what trading club he has, but we're definitely on the lookout for helping as many people as possible. So definitely send me an email. If you go into the thetatraders.com website, I think there's a contact form to contact Lance directly on there as well. So also, if you're not in Theta Traders, just come in there's a 7-day trial. Like, come in, say hello, see the different strategies. Think you'll be surprised. So
yeah, you'll see all of these. I wrote ebook strategy guides for every member. If you want 7-day free trial, you could read all of my strategy guides for free if you want, and then ask me any questions you want for free for the 7 days. If it's not for you, it's fine. Just go my ways. Also, was it Boomer Trades? I think if he does know any other people that might want to join our service, definitely send me an email and we can talk about it in private.
Yeah, for sure. And then, so I have a couple of questions if nobody else does. So give them a few minutes. But one thing that I really like, the whole point of me asking if we could sit down and do this was to talk through some of what like I've been doing on my own account. So it'd be kind of cool just for transparency to show people like me actually taking the trades, what the situation of my account is. And I'm just really curious about what you have to say about what I did to hedge. So maybe that's a good thing. It's the flies that you were talking about. But I pulled the trigger kind of quickly, and I have no idea how to manage them going forward. So maybe
that's one of the things that I do help all members, Russell included. So any members that are wondering about certain positions, I love helping people. I am a science teacher as well during the day. Pretty much have 2 main jobs here. So definitely ask me questions. We can do it right now if you have.
Yeah, like I'm not freaking out. So I don't know if you can see my portfolio at the moment. Like just should appeared. I'll put it up fully. I'm not freaking out or anything, but you can see, what I'm like. I push these returns. So I'm heavily into like ES, for example. You're not really supposed to take on multiple ES, when your account net lick is only about 25,000. But I try and time it and do it as sensibly as possible. But some of your hedges are really helping to reduce the fact that my buying power is not going to zero, which without the hedges it would be, and I'd be kind of stuck. So I really see the value in these hedges. And so I wanted to quickly talk through first of all, the 112. So I'm not the most organized, but you can see on the left here, this is the 112. I already got rid of the puts for a good profit, leaving the debit spread, which might be hard to see here. But you can see that the debit spread on this line right here is at $85 profit. And that was negative for a long, long time. And I was going to close it. And you were just like, nope, hold it, keep going. And so it is helping to offset. Plus, it's helping to reduce the buying power that the span margin part of this with the futures trading is a big problem, right? So it does help with that. Anyway, so the ones I want to talk about is this XSP. So you started doing these flies, and I did 2 of them. So you can see the list of them here. October 6th and then October 13th.
Yep.
So my question here is, I read that you were saying that if you can get the price down to this -2, so this October 6th, 415 on X, that's where you'll get your maximum profit near expiration. Is that right?
Yeah. It's at the top of that triangle. Remember that I showed?
Right.
So
right.
if you're right at 415, like a penny over it, you're pretty much at the very top of the triangle. Again, the sold puts that you did would expire worthless. So you made a bunch of money on those sold puts. You also bought a put at the 418. See it right below?
Right here, yeah.
Yeah, so you bought the 418 for a pretty small debit, but that would be worth quite a bit, because if you're at 415 compared to 418, that's 3 different, right?
Right.
You can make almost 300 on that.
Right.
And
the problem is we're not there.
Is it a problem though? Because we're making money on the initial trades.
That's right, and that's where it comes in. These only cost me what, $25 or something?
Yeah, it was
so
cheap.
Is that the max I can lose on one of these hedges? Is $25?
That is the max. The max you can lose is what you pay for in your Ironfly.
Right. And so even though we're nowhere near, we're at 425 on this XSP, it would have to drop like a ton, like a way down here, but that would produce hundreds of dollars, or a couple hundred of dollars of hedging income, right? Which would help cushion the puts that I have on MES. And I hope this isn't getting too complex for people who are not familiar with all these different things. But I do have 4160 puts for next week on October 13th. And so if they get challenged, I'm really going to be enjoying the fact that I have these hedges, because it will cushion that blow significantly. Will it rule it out completely? I don't know. What do you think? Will it be enough? I've never been challenged. I've never lost a trade, so I don't know.
Right. We haven't lost a trade on these in 1.5 years.
Right.
But in the chance that it does, and it would eventually happen, but when it does, let's say it closed at 41.58 or 59, you would be assigned on that 4160 puts. But on that second one that you have in the Ironfly, the 8 DTE one, that would pay almost 10 times as much money that you bought it for. Pretty close. So it would pretty much offset almost all of, and it wouldn't even be a loss of 41.58 on your puts, because you took in premium on those anyway. You would be extending the contracts, but you could just wheel it out or close the position when you get assigned, and then take a very small loss on those sold puts.
Right.
But it'd be perfectly fine because you made even more on those Ironflies.
So for these October 13th flies, this almost negates the fact I could even take a loss, or a very small loss. Even the worst case scenario, which hasn't happened yet, that's amazing. I mean, it's amazing. It's truly amazing. It's almost risk-free trading. I know it sounds ridiculous and a scam, but you do this right with somebody smart with Lance, you can almost trade these risk-free and make several percent a month without sweating it, which is really, really cool. So I'm excited about it.
Yep, that's a good way to think about it. The way that I think about it is buying these hedges is just the cost of doing business. You run a business, you got to have insurance in case anything crazy happens, right? Like a big fire happens in your grocery store and all your food burns. They're going to be able to cover that with their insurance, right? So you're buying these different type of hedge strategies as insurance for a big market drop. And I'm perfectly fine with the hedges making nothing. If it makes nothing, you're probably doing really good on everything else. And obviously, if you want to take in more money on the everything else part than you are on your hedges. Okay.
Yeah. And so adding these hedges, like, it allows you to then feel more confident, more relaxed, and you can even take on more positions, which is what I do. I push it way too hard. Like, you're only supposed to use 50% of your buying power. But with these hedges and things and being careful, I feel like you can increase your returns like slightly. I think I did 30 to 40% more by doing that this last month, which helps people if they want to increase their returns a bit more. So
possibly. Russell, did I alert that 8 DTE trade, or did you come up with it yourself and ask for my help? I already know the answer to that.
Which AD? Oh, that. So what happened was I saw you telling people that were worried that there was 100 points like on the MES 4160s. You guys had done this Friday, so tomorrow you had done 4160 puts, and you were telling people, why don't you do the October 6th fly? And so stupidly, I just went, all right, I'll do it. And then I realized it's not even until next week, my expiration. So
I don't think it was stupid, though. I think it was a good idea to hedge your portfolio. It's your insurance.
Yeah. Well, it's working out all right. I'm back to break even. My portfolio hit high of the day or year so far the other day. So it was yesterday or today, but so that's pretty good. So yeah.
One of the things that I do want to mention is you want to have different trade possibilities in play where you're perfectly fine with making the profit that you could get if it works out and pay the hedge. So what that means is if your goal is, say, 2% a month, my goal is 2.5% a month on my trades. I want to do trades that might make, say, 3% a month and then hedge and pay the other 0.5 or so percent. So then I'm perfectly fine when I make my 2.5% instead of 3% because I bought the hedges. But I'm perfectly fine with the hedges expiring worthless and it was a complete loss because I made my goals anyway because I made my 2.5%, right? You don't want to necessarily think of hedges as, oh, no, it didn't work out and now I'm lost that money. You want to think about it in a positive way. All the other trades worked out because the hedge didn't work out. Does that make sense?
Yeah, definitely. And I think it's cool because you're always adapting and learning, and you're always adding new strategies and improving the service in general. So, and the service has multiple tiers. So like, there's the basic tier, and then there's like the full blown like inner circle lifetime Lance's trades. You get everything. You get all the hedging stuff. You get the consistent passive profits future stuff, which is my favorite. I think it's a lot of people's favorite going forward. But he also does 0DTE SPX daily trades as well, which are pretty popular as well with some people too. Not my cup of tea because I just want to like put on trades and then forget about them and let theta decay take care of the rest. So.
Right. I give a lot of different strategies because there's a lot of members that want certain types of returns and they just feel more comfortable or they don't have as much time to take trades on. Like the 112 trade I just showed earlier, it's 130 days out. You don't have to be watching it like a hawk every second to see what's happening, right? A lot of it's just waiting, literally months, but you can make good returns. So that's why I do a lot of different strategies.
Definitely. And you do it all whilst teaching chemistry, raising a family of 2 daughters, like all this crazy.
In my lunch and planning periods.
Yeah. I don't know how you do it.
I did the last trade in the evening, so I'm not going to be doing trades in the middle of teaching.
Well, this is the beautiful thing about a lot of the strategies, especially the future stuff, which sounds intimidating if you're not used to it, but it took me like 20 minutes to figure it out with Tasty Trades. You can put these trades in on Sunday nights. So,
Yep.
like, I tend not to. I tend to put them in Sundays, but then add extra throughout the week. But that's really up to you, and you can try and honestly, sometimes it's spinning your wheels and just adding more like extra stuff. So,
I mean, it's very flexible. Some people work 9 to 5 jobs. They're not going to be wanting to look at their accounts every minute of the day, or they can't do that. So I do a lot of trades in the evening because there's not really a big rush to do it. You could do the trade I posted tomorrow in market hours if you want. You could do it right now if you want. Futures are available in the overnight. And I try to make trades where they're very easily accessible to most members based on when they're free to do them.
yeah, and overall, like it does help to have a larger account in terms of like it's hard to do these trades with $1,000, but you know if you have 10,000 or 20 or 50 or 100,000, you can start to make significant returns. Like these are high probability, like really high probability trades, but you're not going to triple an account. I think it's important that we're transparent about this. You're not going to triple an account in a month or a week or 2 weeks or whatever.
Yeah, exactly. The baseball analogy is we're going for base hits and doubles. We're not going for home runs here, but we're very consistent in what we make. Like, and I'm very transparent with all the trades I post on my spreadsheet, say exactly when I close them and whatnot, and been getting at least 2.5% almost every month this year. Last month was the only month I didn't do that, and I made like only 1.7%. But we had some 6-8% months as well. So depends on what happens with the market. Depends on how you're able to manage them.
Yeah, definitely. And I think people used to ask me what's the number one mistake traders make. And I used to say things like patience and, you know, sort of stuff. Now I think it's they try and get too high returns and lose all their money. Like I honestly feel like after a decade of seeing people do this, that's what happens. And then they move on to the next best thing and the next best thing, and then they blow up their accounts and they spend all their money on services. And then, whereas like, I really think that's the best thing to do, and that's why I'm so excited to be working with Lance, and it's kind of taken up a lot more of my time. Like I spend a lot of time talking to you about these things and trying to figure out new ways that we can help people in the services and improve things and stuff, because I really believe in it, and I think it's a fantastic service. So, yeah.
Sounds good. There's still 11 people there. Any other last questions before we turn it off for the night? I'll leave anything quick.
Yeah, like I said, you can always reach out to us on thetatraders.com. I'll post that website one more time because it's really worth coming in on the trial, because then you can really pick Lance's brains. He is one of the most active gurus that you'll ever find, where he'll just immediately PM you when you come into the Discord and be like, hey, do you need any help? What would you like to know, kind of thing. It's a whole different level from what most people are used to. There's different plans on thetatraders.com. The cheapest is the quarterly plan. Most people don't stay on the quarterly plan, though. They come in, they do the 7-day trial, but we give them access to every single inner circle trade from all these advanced strategies and all this mentoring from Lance. And it's something like, what would you say, 70% of people then immediately upgrade to inner circle and go the full hog and don't look back. So
and definitely, if you're just even mildly considering doing this, do the 7-day free trial. If it's not for you, it's not for you. This type of strategies isn't for everybody. You know, some people that want to make their 20-30% a month, you probably won't necessarily like this strategy in general. But we see a lot of members that tried that way. They're trying to go for their home runs all the time. They're striking out and they're losing on their account. And then they just want to find something that's more consistent to get those base hits and doubles. So that's why we're here.
It's the biggest mistake I see. Everybody that gives up on theta traders, they go away, they blow up their account trying to do some, crazy thing, and then they come back and go, maybe
we have some that come back. I've seen people from 2-3 years ago. They're signing up again, and they're like, okay, understood. But also, I definitely want to reiterate: if you make 2% a month on your money, month after month after month, you will grow accounts. Obviously you want some money there. If you're only doing it with $1,000, it's not going to be a dramatic gain. But if you have $5,000, $10,000, 2% every month, looking out a few years, it will grow accounts.
Yeah, it's definitely not the get rich quick thing. I mean, I think I did a presentation with you about consistent passive profits, where basically I bought a new car, right? It was a $35,000 car, and basically it's basically paid for with 30 seconds of work every Sunday night, and that's all I'm particularly need at the moment. And I'm not trying to make 10 grand a month in trading profits, and just to cover expenses and have some fun and learn new skills. I think it's been fantastic. So, yeah.
All right. I don't see any other questions, so I guess we could stop for now. But again, if you have any questions, you can join that free trial, thetatraders.com. If you want, send me an email. It's just lancekaminsky@thetatraders.com. There's a contact form on the website as well. If Russell, you want to post the website link maybe real quick.
And yeah, I did.
Contact me there. So.
Yeah, the website link, thetatraders.com, is in there. I think we're probably going to post this on my channel, but also on your channel as well, right? So people can go through this and see.
And if you have any other questions or comments, if you're just watching this and you're not free tonight, leave a comment on one of either our channels, and we'll respond to those as well.
Cool. Well, guys, hopefully that was helpful. I think it's always good to talk to Lance, and I know a lot of you guys that are already in Theta Traders hopefully start to get a little bit more insight, and we'll start to pursue some of these things a little bit more. Highly recommend it. So
sounds good. Have a good evening, everybody.
All right, guys. Thank you for watching. Hopefully this will be the start of a new journey for some of you guys. If not, have fun. Good luck trading, and we'll talk to you guys soon.
Have a good night.